Hey, and welcome to another video here at Fiscal Voyage. I'm Felix, and we're going to do a stock analysis on Starbucks Corporation. Uh, Starbucks Corporation was suggested by investing with Jason. Thank you, Jason, for suggesting for me to do an analysis on Starbucks. So let's start. 5 minute stock analysis. We're going to determine if it's a buy, hold, or sell. Coming right now. Okay, so here's the Starbucks Corporation stock analysis. Starbucks, I'm sure you guys heard of, is American coffee company and coffee house chain. Starbucks was founded in Seattle, Washington in 1971. And as of early as this year, the company operates over 30,000 locations worldwide. Let's look at some of the fundamentals. Note, fiscal year ends in September, so they actually announced for their 2019 fiscal year earnings. So revenue grew at a compound rate of 10.60% from 2010 to 2019. Net income grew at a higher rate at 16.61 in that same time period. They currently have a triple B plus investment grade rating from S&P. Operating income in that same time period 12.80%, and earnings growth at a whopping almost 18%. That's outstanding for earnings. The last 5 year average revenue grew at an 8.45% and net income at 6.89%. So revenue and net income has been slowing down versus their 10-year average. However, earnings still is growing at a rapid rate of 15.69%. All right, so we look at what they reported for 2019 adjusted earnings, which came in at $2.83. Net margin at 13.58%, which is less than the previous year, 2018, of 18.28%. So it's been compressing, but they tend to average out around the 15% in net margin. Debt to cap is extremely high at 224%. I guess that's okay because the company is still growing at a rapid rate. Currently, they do have a low yield of 1.98%, and the dividend payout is at 53.8%. So their dividend growth, I think, is going to slow down, mostly maybe at the 7-8% growth rate. However, they do have a 5 year growth rate of 24.29%, but I don't see that continuing. They've been growing dividends for 10 years straight. They have a charter rule of 26.27, which is the current dividend yield plus the 5 year growth rate. And their most recent dividend increase came at 13.9% in October. Future outlook analysts expect 2020 to come in at $3.04 versus 2019 of $2.83, so it's a much higher rate. 2021 at $3.40. CFRA projects a earnings growth of 14% for the next 3 years, and my dividend drill return model calculation has a potential return of 12.70% going forward. Currently, they have a PE of 29.33 based on 2019 earnings, but if we look at the forward PE, it comes in at 27.30, which is lower than the 5 year PE average. If we look at the fast graph, we see here that the black line is the monthly closing price, the blue line is the normal PE, and the orange is the earnings at a 15 PE. As you can see here, the black is basically at the blue lines, suggesting fair value territory. So let's see if that comes to fruition. My fair value price estimates. CFRA has a fair value of 69 and 10 cents. Morningstar 90. Simply Wadi super low at 55.53. Fast Graph at 89.86 cents. Yahoo at 94. My dividend discount analysis at 93.48 cents. My fair value estimate comes in at $82.09. Current price is at 83.02. So therefore, the stock is slightly overvalued to fairly valued by 1.12%. So with that, I recommend it as a buy. I actually just opened a position last week with Starbucks. The only thing I don't like is the low dividend yield, but it makes up with the high dividend growth rate. The company is continuing growing. The Starbucks locations are always packed with people, buying coffees and whatnot, and I see that continuing to grow. So with that, I recommend it as a buy at current prices. It's not extremely undervalued, but it's fairly valued for a great company. So, it's better to buy a fairly valued company that's outstanding versus an undervalued company that's okay. So with that, I recommend it as a buy. Therefore, thank you for watching, and let me know if you have another company you'd like to analyze in the future. Leave a comment and hit the like button and subscribe to the channel. Thank you.